Good morning, I'm Sharad Kutan with me, Tan Chung Han, and on the line we have Jameel Ahmad, Vice President of Corporate Development and Market Research at FXTM.
Good morning, Jameel. All right, I'm looking at the pound right now, and it's on a quite the roller coaster ride there. What are you reading into this, based on the pound's movement alone?
Thank you very much for having me, firstly. You're completely right. All eyes are on the British pound, and the world is watching right now the UK election outcome. So far, we've been a little bit slow when it comes to the news and hearing who's winning the election so far. This is because of a higher turnout than we expected. But we did see a very sharp move early in the hours of this morning when trading opened, and this is because the polls suggest that the UK is heading for a hung parliament, which was not what the markets were expecting. They were pricing a Theresa May victory for the Conservative Party, and as a result of this, since trading began today, we started around 130 against the dollar. We fell as low as mid-127s.
Now, you're certainly right. So now that we are in this position, what would be the ideal scenario for positive pound? Because obviously, in the lead up to the exit polls or in the lead up to election day, markets had been over optimistic about Theresa May's chances, right? So now moving forward, what will be the best case scenario for pound investors?
Well, what I would say here is this is another example of recent history repeating itself and traders getting on the wrong side of the trade. Because investors backed Theresa May as if this was a one-horse race and if she was going to be the victor by a clear country mile. Quite clearly, as we've headed closer to the election night, and as we can see from this preliminary exit poll, it's not completely valid, but it looks like it's going to provide a decent indication. Theresa May is not heading for a one-horse race. She has got a fight on her hands inside the Conservative Party. Look, if we need a positive outcome for the pound, and by this we mean less volatility and more stability in the market, Theresa May and the Conservatives need to win, but they need a clear majority. At the moment, it doesn't look like it's heading that way, which means more uncertainty for the United Kingdom economy, because there'll be a hung parliament when they're supposed to head into the Brexit negotiations, and it looks like it would add further pressure on the British pound.
Now, beyond the elements or the heightened risk of political uncertainty for the UK moving forward, could this result be a silver lining in the sense of trying to prop up or turn attention back towards the economic fundamentals of the UK? Where's that storyline? Does it fit into what's going on right now?
Well, I can tell you one positive is considering we're speaking from Malaysia right now. The ringgit should strengthen against the pound if the pound considers to fall, so that's a positive for you guys. Now, when it comes to the economic relationships and the fundamentals, the truth be told, investors have been ignoring economic data for some time from the UK economy. It's been making headlines and in the news. However, when it comes to price action on the charts and trading, Brexit negotiations, UK election, it's all that's been priced into the pound and what investors have been talking about. Typically speaking, the UK economy is still performing well. It's doing reasonably robust, and it's actually performing better than we expected, considering the unexpected outcome to the EU referendum, which is now just 1 year ago. What we need to look out for now is that once the UK finally, and we say finally because we've been waiting for this for a very long time, starts the Brexit negotiations, which will probably be delayed if it is a hung parliament, we need to see if there is then an impact on the UK economic data, which means the fundamentals. And if there is an economic fallback on the fundamentals, this would then put further pressure on the pound, in my view.
Now, what other asset classes are you looking at here? Should there be a rally in or should there be a push towards safe haven assets right now, given what we are seeing with the markets?
Now, this is an interesting question to ask, and actually this is what I would expect. But so far today, all eyes have been on the pound, and there hasn't actually been much volatility elsewhere, despite a very sharp move in the early hours of this morning. Now, usually in circumstances like this, you would expect pushes for safe havens like you pointed out. So we'd expect a stronger gold valuation and a stronger Japanese yen. Those just two of the instruments you'd expect to see gains in. If the markets become more uncertain and if these election outcomes and the votes as they start being announced suggest that we are heading for even more uncertainty in the market and even more uncertainty when it comes to United Kingdom and its no Brexit direction, to be honest with you, then yes, I would expect some pushes for these safe haven assets.
So with these kind of geopolitical concerns, and this looks to be rising now, given what the exit poll suggests, how much do you think the BOE and even the ECB, how much do you think regional central banks will be factoring this into their monetary policy outlooks moving forward?
This is a good topic to bring up, actually. Let's start with the European Central Bank. I personally am very bullish on the euro right now. I still believe it can correct higher, despite the gains it's made over the past couple of months, since it was around 106 against the dollar, it's now around 111. I think the European Central Bank, regardless of the UK election outcome, are going to continue to try and talk down the euro, but over the medium and the longer term, the euro should be stronger. And the reason for this is because the economic picture in Europe is turning the corner, and hopefully this is going to stay because we've said this before. Now, when it comes to the Bank of England and their own monetary policy outlook, this could change depending on what this outcome is to the election, because clearly the UK economy is headed in for inflation risk, is facing a higher period of inflation because of the historic sterling weakness following the EU referendum outcome. But if there is a hung parliament, or if these Brexit negotiations become even more pushback, or if there is economic uncertainty, the Bank of England may have to turn their hand, and I would say turn their hand at least verbally at this stage, towards suggesting there will be no interest rate raises higher. And if anything, if there is economic uncertainty, we might need to cut interest rates once again, following the downgrade last year.
Now, Jameel, but as you pointed out, we have seen the EU economy basically turn a corner. So how much do you think that stronger economic data can offset these uncertainties about possible heightened geopolitical risk? Because we recall a year ago, this time last year, when the Brexit referendum was passed, there was plenty of uncertainty about that relationship between the EU and the UK. Now it seems that investors have had a year to fully price this in. They've had time to digest this data, and also significantly since then, we have seen the EU economy stage a rebound. So how much will that kind of offset the concerns between possible deterioration or just uncertainty between the UK and the EU?
I tell you what, you've hit the nail on the hammer then, because basically the EU economy does look like it's turned the corner, and economic sentiment around Europe is improving to the point where there's many people becoming very optimistic on Europe. Now, to me, what this means is it's going to be even harder for the United Kingdom to enter these Brexit negotiations, because Europe can stand at its side of the table and say, you know what, our economy is performing better. We might not actually need UK trade as much as the UK trade, or the UK economy in this case, needs our single passport access, needs access to our EU markets. Let's not forget, the French elections now are out the way, and it looks like Europe has defeated populism as it currently stands. We've got an election coming up in Germany at the end of this year, but for now, Europe's looking pretty stable, and all of the uncertainty is continuously surrounding the United Kingdom and its economy. And looking at this poll suggesting that we're heading for a hung parliament, this means there's even more uncertainty for the UK.
All right, Jameel, our final question here, because I know you're pulling an all-nighter over there. So moving forward in the coming hours until we find out those official results, what kind of trades will you be eyeing, or is it just all eyes on the pound, as you said early on?
It is all eyes on the pound for now, and we do think that it's possible the pound will weaken a little bit further, depending on confirmation that we are heading for a hung parliament. At the moment, it's still a little bit uncertain, but if you're looking for trading opportunities, and of course, traders need to know their risks in these uncertain times and be educated before they just position a trade, we think that the trading opportunity would be to see some more downside pressure in the pound over the medium and longer term. Upside potential is really limited at this point to confirmation of a Conservative victory, but most of this has been priced in before the election took place. Outside of that, we need to see what the aftermath is to the UK election before we can provide some more insight towards further asset classes.
Jameel Ahmad, excellent analysis there. Thank you so much for speaking to us here on The Morning Run. Again, that was Jameel Ahmad, Vice President of Corporate Development and Market Research with Forex Time.
Just very quickly, the question of exit polls, everybody's talking about them. How good are they? How reliable? I just pulled up a story here, Han, that suggests that in 2005 and 2010, the exit polls were correct. But in 2015, they were wrong by some 22 seats. It was predicted that Tories or the Conservatives would lose would get a majority, but they would be 10 seats short of a majority, but in fact they got a majority of 12. And this is exactly what we're looking at. The exit polls are saying they're going to be 12 seats short of a majority. Will the exit polls be right this time? We don't know. We'll be back with more BFM 89.9.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.